So disappointing quarter for earnings in IT space. After TCS, we have HCL Tech, which reported the numbers as well. The top loser on the Nifty after revenues and margins miss expectations. The company has lowered its margin guidance from 18 to 19% earlier to 17 to 18% now.
Rallis surges over 8% after delivering strong margin expansion in the first quarter. The management tells CNBC-TV18 that they expect to benefit from the China Plus One theme going ahead. They guide for revenue growth in double digits with margin improvement in FY26.
Tejas Networks declined 6% after a weak first quarter. Revenue declines nearly 90% sequentially. The company records a loss of over 190 crore rupees. You stay tuned to Chartbusters because the management joins in shortly to discuss their first quarter numbers.
Bandhan Bank rallies close to around 3%. It's higher after the new Chief Risk Officer, Biju Punachalil, who earlier held a role in South India Bank, has come on board. Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And earnings are trickling in thick and fast. So I think, Mangalam, we've got a couple of managements. Let's get straight to it.
We have a couple of managements. Let's talk about Tejas Networks. That stock actually is trading with deep cuts after a weak first quarter. The revenue declined nearly 90%. And, it was quarter on quarter. We saw the company post a loss of nearly 200 crores. Arnab Roy, who's the COO and Executive Director, as well as Sumit Dhingra, who's the CFO of the company, joined in. Arnab, Sumit, thanks a lot, gentlemen, for joining in. The street obviously visibly disappointed by the numbers that you posted. The stock is lower. But what we want to understand from you is how much of this quarter's performance was a one-off, because you have alluded to a couple of challenges that you all faced during the quarter, a couple of things that have moved into the second quarter. Some of the things that were happening in the first quarter will be reversed in the second quarter. If you could just put a number to that, had it not been for those one-offs, how would the numbers look? And going forward, what is it that you're targeting? Let's start with Arnab. Arnab.
Yeah, so thanks for having us. So first of all, I think we wouldn't like to give a guidance on what the numbers would be, but I'd like to really set the context of what this year and the quarter and the subsequent quarters are going to be. So first of all, let's see. We came off in FY25. We came off on the back of a really large project, this BSNL 100,000 sites, which we had to deliver in a very accelerated way, and that kind of resulted in a huge bump up of our revenues from FY24 to 25. So obviously, we are all been very clear that FY26 is not going to be in the background of FY25, and we should look at our business in the context of FY24 and so on. So from that point of view, I think one of the main reasons why the Q1 was behind our plan was, some of the POs that got shifted, because one of the big business that we were about to log was this BSNL expansion of from the 100,000 sites to the next phase of expansion, and we were expecting to close the PO and shipment of another 18,000 sites, add-on sites, and that got delayed a bit. Plus, a few other customer shipments got a bit delayed because of inventory and clearances. So in a way, yes, this is a one-off quarter where things got pushed out more than anything else, and we should be able to see the results, the catch-up of this business in Q2 and Q3. That's going to happen. The other important thing is that this year is kind of a transformational year for us, as you've seen our announcements during the last few months, where we have set up air partnerships with international companies like NEC, like Rakuten, and so on. So we are kind of setting up the company. We are investing in our business for growing our product portfolio, kind of making it complete and really cutting edge, state of the art, and also putting a lot of emphasis in our global business growth, in the international business growth. So with all these factors put together, I think we see a very strong future, business growth for us over the next, several quarters and the next few years. And it has been a kind of investment and transformation mode for us as well.
All right. Hi, Arnab, as well as Sumit. Good to have you on the show. Thanks a lot for joining in. Everyone is aware there's a big potential for the company. The problem is, when is it going to come? So let's get a couple of basic details out of the way. On growth, you're saying is still a little bit uncertain. But let's focus on the margin number. Is quarter one the rock bottom quarter and things recover from here on? In that sense, will you be EBITDA positive in the second quarter? Point number one. The other point is on receivables. It's close to around 3,500 crores, little in that vicinity. When do you see this receivable number come down? Margins and receivables. Please go ahead.
Yeah, sure. I think on margins, I think we need to look at two levels. One is at the material margin level or the gross margin level, which if you see quarter on quarter, there's been a improvement compared to the previous quarter. As we've been talking about in our past conversations and our calls as well, I think a lot of our material margin level movement gets driven by the product mix or the project mix during the quarter. And because of the lumpiness in revenue that is visible right now, I think that adds to the margin movements at the material margin level across quarters. So as we see a normalization or diversification of revenue play out for us across our customer base and projects, we should see slightly more predictable margins, both at the material margin level and at the EBITDA or EBIT level. I think beyond, if you look at beyond material margin, a lot of our costs are fixed in nature. So if you see, a lot of it is employee cost and administrative expenses. If you see over the past few quarters, as the scale picked up, there was a visible improvement in profitability because of these factors. Now, as we go along, over the next few quarters and ramp up our revenue, particularly from international business, we should see the improvement in margin come through.
And receivables?
Yeah, see, receivables, I think there are 2 points to sort of highlight here. I think what you see as reported receivables are to a large extent or significantly on account of the BSNL 4G project that got executed over the past few quarters. In fact, the last quarter was the completion of the project. Now, those receivables are expected to be collected over a period of time based on certain milestones related to implementation of the project. So we should see that coming down over the next few quarters within this financial year. Also, a part of these receivables are essentially against that. We also have received an advance on this project of about 1460 crores. Now that lies in the other liabilities because some of the milestones that were to be delivered are yet to be completed. So on a net basis, I think the actual receivable number is much lower than what you see on the reported statements.
Got that, Sumit. Let's go back to Arnab because Sumit, you said something which was important. One, international orders will pick up in your overall revenue mix. And secondly, the BSNL part itself. Arnab, BSNL, it was earlier 100,000. Now it's scaled down to 18,000. For how long does BSNL continue to give you orders? Because it's been scaling down the scope of business that it's been given to other vendors as well. So that's point number one. And secondly, international, which is close to around 19% of your revenues, how much does that contribute to your revenues, say, over the next 2 to 3 years?
Yeah. So first of all, regarding BSNL, I mean, while we are actively trying to grow our business so that it is not heavily dependent on the BSNL business, but as far as the network plans are concerned, if you see, they have deployed 100,000 sites, and which is not adequate for a pan-national network. So there will be expansion in their network, and the initial phase was they were planning to do 25, 26,000 sites as an add-on, and they have come with the initial offer for 18,000 sites. But for a nationwide deployment, they will definitely need more sites, and then there is a 5G upgrade which is planned across the country when they launch their 5G services and so on. So BSNL itself has a long roadmap to upgrading the network, with 4G and 5G and so on. So that should be a good opportunity for us. But having said that, I think our plan is not to build our own business, the complete business based on BSNL. It is a good stepping stone for building our technology and really proving it in a very tough conditions. So that's the reason why you see all our partnerships and all announcements with the NEC, with Rakuten and so on, because international markets and global operators is what our target really is. And this is the year where we want to see the results of all those efforts that have been going on.
So how much? International is 19% now. How much does that go to by the end of this year and by the end of next 3 years? What's the aspirational number here?
Yeah, so it's hard to give a number, but I would say, we certainly want to see, close to 30-40% of our business going to international as soon as possible. That would be a good milestone. And then going forward from there.
All right. Since you're speaking about TAM, this is one number you can at least give us. BSNL, BharatNet. Put it together. What is the potential TAM for y'all? If you could tell us on that front. And also R&D spend, if I got the number correct, I think you're spending around 80 million. You could correct me on that number. How ready are y'all to, penetrate further and take much of that TAM? So TAM, and what is the R&D spend that you're looking at from here on?
Yeah. So as far as TAM is concerned, I mean, our business is not just the BharatNet and BSNL. If you see our business, I mean, there's a lot of other India private operators where we had our historical wireline business. There are the utilities, the power, gas, rail sectors. There are the ISPs in India. And then there are the operators internationally. So just BSNL and BharatNet is one part, a significant part of this business. So from an absolute number point of view, you can only guess that if the initial project for 100,000 sites was a certain number, I mean, it will be proportionate to that in terms of...
Give us the number, sir. Give us the number, sir. I mean, according to you, what could the rough TAM be?
Yeah, so I think the initial 100,000 site projects was what, 7,000 crores?
Yeah.
Or around 8,000 crores. So depending on how many sites they expand to, if it is like 20,000, if it is 50,000, if it is more than that, we have heard announcements about BSNL might need another 100,000 sites. Those are announcements that we heard. So you can calculate a TAM based on the initial number, which is like 8,000 crores for 100,000 sites. You could look at it. And, BharatNet, our addressable opportunity is only the active electronics, the routers which get into the project. Of course, the total spend on fiber, on deployment, on NOC, those are far more, but our proportion is only for the routers, which is...
What would that number be, sir?
I think that totally, it would turn out to be, maybe 1,000 crore or, a little more than that kind of a thing.
All right, we take that point. Thank you so much, Sumit and Arnav, for joining in. Your TAM would be close to 1,000 crores of the 8,000 crore opportunity that there is in the BharatNet business. But beyond that, more importantly, you're looking at improving your revenue coming in from the international business. The aspirational number here is 30 to 40%. And you do believe that margins are likely to normalize going forward. The first quarter impacted by a couple of delays, etc. as well. We will most definitely keep an eye out on how growth pans out, not in FY26, which you've called out to be a transformational year, but FY27 onwards as well as your portfolio changes. Thank you for joining in. With that, let's move on and tell you an important programming alert. A big CNBC-TV18 exclusive coming up. The RBI governor will speak to Lata Venkatesh. And no big question is off the table. From an inflation standpoint, 6-year low, liquidity and global risks, what does it all mean for rates and growth to come by? Catch the most definitive RBI governor interview post noon today, only on CNBC-TV18.
Welcome back. Well, the markets are doing a bit of a bounce, particularly the Nifty Bank. Actually, even yesterday's trading session, the Nifty Bank was the outperformer. Even today, it's doing fairly well. And the good point today is that the Nifty is making a higher high after 4 sessions. On a day-to-day basis, we're seeing that the Nifty has been making a lower high and a lower low. Now, that's turned around a little bit. Let's welcome Somil Mehta from Mirae Asset Sharekhan, who joins us on the show. Hi, Somil. What's your take on the Nifty? 25,000 is the important mark. We went to that mark yesterday and we bounced off there. Now all eyes on the 20 MA. Well, what view would you have?
Good morning. Good morning. Absolutely, I agree. All eyes on 20 daily moving average, which is around 25,300 levels, which is also very close to 40 hourly exponential moving average. So yes, all eyes on that average. But the first thing we need to consider is that Nifty has started making lower tops, low bottom formation on the daily charts. The swing low of 25,330 was broken last week, and that was the first sign of reversal. Now we have also closed below the 20 daily moving average, which is the short-term moving average, and that is broken on the downside. On the hourly charts today, we are bouncing back, and I'm expecting this bounce back to continue till 25,300. take resistance at 20 daily moving average, and again continue the downtrend. So my view is a little negative in the short term, where my targets would be around 24,800, 24,700 levels. Now the resistance is of course 20 daily moving average, which is 25,300 levels, and a little higher, which is 25,400. 25,400, you remember we have this very strong support previously, but now it will become a resistance going forward.
That.
So that will be the resistance. So view is
All right,
negative.
Right, your view is negative. You are looking at 24,800, but you look to short the index only closer to 24,300 sort of levels. And if it does cross by, then perhaps we will see some sort of short covering out there. 24,300 is a stiff resistance, is what you're saying. But meanwhile, as we speak, the IT index should come up for you. The IT stocks, after seeing a bit of a drubbing over the last 3-4 trading sessions, ever since TCS's numbers are out, we have seen that IT index reverse, and that's also supporting the frontline index. So the Nifty bank, which has been doing well for the last few trading sessions, continues to do well, and now is getting support from an erstwhile underperforming sector, the IT space as well. So we'll keep an eye out on how that pans out. Any individual stock ideas that you have for us this morning, Somil?
Just for this bounce back of 200 points, I have two stocks, Shriram Finance. Again, a small consolidation which is broken on the upside on the hourly charts. Stop loss would be 660. Targets would be 710. The second stock is DLF, has taken support at 40 daily moving average. Stop loss would be 810 and targets would be 870.
All right, Somil, thank you so much for joining in and giving us your views on the individual stocks as well as the index. So just pull up the intraday chart of Patanjali Foods. That stock's moved to the high point of trade. The company obviously has announced to the exchanges yesterday that the board meets on July 17th to consider a bonus issue along with the numbers as well. So to that extent, now the street is seeing some up move on that stock at the high point. We'll get you some more ideas for profit coming in from our colleagues at Money Control Pro. Today we have Neha Dave joining in with the stock. Neha.
Today's stock idea is LIC Housing Finance, the largest housing finance company focused on retail home loans to salaried segment with asset under management of over rupees 3 lakh crore as of March end. Growth has been an issue for the company in the past. In its loan assets have seen a compounded annual growth rate of just 7% and disbursements have seen a mere 4% CAGR in the last 4 years. Management is, however, guiding for disbursements to grow by 10 to 12% at least and loan book to grow in double digits for FY26. The guidance looks promising given the large asset base and stiff competition from the banks. Asset quality has been improving for the company and its funding cost has significantly eased. However, the cut in the lending rate could put pressure on the margins. Management intends to maintain a spread of 2% going forward. Despite wafer-thin margins in the home loan business, LIC Housing Finance's profitability improved in FY25 with company posting return on asset of 1.83%, the highest in the last decade. The improvement in ROA was driven by low credit cost and a very low operating cost structure, which is the moat for the company. Now, in terms of valuation, the stock is currently trading at around 0.7 times book value estimated for FY27 and is trading below a trailing book value for FY25. But the low valuation should not be the only reason to consider a stock. In addition to undemanding valuation, upbeat guidance on loan growth, improving asset quality, and most importantly, significant easing of liquidity and a sharp fall in the policy rate makes us positive on the company's outlook. LIC Housing Finance could command a valuation of at least 1 time forward book value, which could translate into a meaningful upside.
Neha, thank you so much for that. With that, let's move on and tell you about a short break that we're taking. And as we do that, let's tell you about CNBC-TV18 Prime, which is our latest offering. Brings you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, gives you unparalleled insights. You can tune into CNBC-TV18 Prime at 12 noon for the Global Reset, 1 p.m. for the Big C and Global Lens at 8:30 p.m. Even as the Nifty bank is doing well, IDFC First has moved to the low point of trade, and we are seeing some bit of weakness in a couple of other financial names as well, M&M Financial for one. But let's talk about something more exciting. It's Tesla. The Indian market is opening for Tesla because Tesla has opened its first showroom in Mumbai today. Parikshit joins us from the location out there. Parikshit, I see a lot of crowd behind you. There's rains and there's just a lot of excitement. The Chief Minister was there too.
Yeah. Of course, Mangalam, yes, there's a lot of chaos here outside the Tesla showroom. In fact, the crew, they're having a hard time controlling the crowds because of the heavy rains, the security. We're just about to get entry into the showroom, but we can tell our viewers that the pricing for the Model Y is out. It's going to be between 62 lakhs for the entry-level rear-wheel drive and 69 to 70 lakhs for the long-range version. So you get a 500-kilometer charge with the rear-wheel drive and about 622 kilometers of range with the long-wheel version. 200 kilometers per hour is the top speed. Deliveries are going to begin very soon. You get this in 8 color options. Stealth Black is all included in the price, but if you want to go for, say, something like a pearl white or a bright red, that can cost you upwards of 1,80,000. FSD or full self-driving option is also available, but the website shows that will cost you an extra 6 lakh rupees. So let's see how the company is factoring that in. But very soon we'll get to know about the booking timelines, about the delivery timelines for the product. Currently it's only the Model Y, but very soon more models could be showcased and brought to India.
So which color have you decided for your Tesla, Parikshit?
Mangalam, I have no intention of buying a new car. I've bought mine 3 years ago. But if you like, I'll definitely and also put in a word.
It'll take me a long time to get to the level where I will be able to afford a 60 lakh rupees car. And even if I do have that money, I don't think I'll be able to spend it on a car, which is a depreciating asset. But that conversation
why not?
Another time.
We should always keep our hopes high.
We'll keep our hopes high indeed. Nigel, which color?
No, two-wheeler, I would take Parikshit's help if in case I'm not getting to jump the line. But we'll keep coming back to you, Parikshit. Have a good one. In case you're carrying your checkbook, then maybe you can pay the deposit.
And for now, I don't think even Parikshit is getting to jump the line with the kind of crew that there is, the crowd that there is in the Tesla showroom. With that, what we'll do is we'll take a short break and give you an important programming note. The RBI governor will shortly be speaking to Lata Venkatesh. Expect answers for all questions that are bothering you. Does 6-year low inflation open up space for more rate cuts? Does low CPI give the RBI some more scope to keep liquidity surplus for longer? Will tariff wars force down RBI's GDP growth forecast? For all of this, tune in post-noon for the most definitive RBI governor interview only on CNBC-TV18.